It means that you should only have this strategy. It means that you don't need any other strategy. Just use this one. You won't need any strategy anymore. What is the ATR indicator? The ATR indicator stands for average true range and is an analysis indicator that measures market volatility for a specific period of time. The ATR indicator is the average of the market's volatility range to show when the market has had high volatility and when the volatility has decreased. So that with the increase in volatility and the upper range of the market, with the bullish guard in the chart, gives the user the opportunity to know about the increasing volatility, and vice versa. In case of a decrease in the volatility and the lower range, the indicator chart will show a reaction signal so that the user is aware of these fluctuations. Be informed. It is important to mention that the main purpose of the ATR indicator is to show the amount of volatility in the market. For a better understanding of the concept of ATR indicator, the following figure shows its application in market fluctuations. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. As we mentioned earlier, the ATR indicator can be used to perform volatility analysis on the chart. The average true range tells you when the volatility is high and when it is low. In addition, it can be a decisive role in achieving more profit. For example, if the indicator has a high reading, you may set your price target higher so that you can make a safer trade with the expectation that more volatility can lead to a more favorable price movement. For example, in the figure above, the indicator chart is times indicate that the red arrows in the ATR indicator are relatively high values and have taken a bullish guard, which is associated with high price volatility. Also, you should pay attention to the long candles in the chart, which indicate high volatility in transactions. As we can see, the chart starts with a downward slope and suddenly starts to rise at a point in the lower indicator. This is the point where you should make your purchase in order to make a decent profit. Likewise, the chart evaluates the price of the upper level of the broken channel and climbs higher with a sharp increase in ATR. In any part where we see a lot of fluctuations in the market and can be seen with long candles, the indicator reacts and its chart level goes up and down accordingly. But along with this strategy, the super trend with this option, when the market price goes down, the ranges that move down are shown in the super trend, and then Ader measures the peaks that have hit the most, and for us, higher ceilings and floors. And he gave us a lower level, and with this, we can put over the blocks that will have many important encounters in the future. How to use ATR in capital markets trading. Wilder originally proposed the ATR trading strategy, the main part of which was to follow the trend of the volatility system. These rules assume that you have entered into the transaction according to these trading rules. For example, the purchase demand in the market creates a high and increasing amount every day. Following these rules in the ATR trading system is very simple. To buy shares, you can consider these rules as follows. ATR should be less than 0.0100, which means there has been less volatility. 2. When the indicator chart moves from red to green so that it takes an upward trend and gives a buy signal. 3. For each purchase, define a stop loss, which is usually 75% of the present value of the ATR. For example, the green super trend in the chart is usually in the buy position, and the red super trend, on the contrary, is in the sell position. In the diagram below, we can see the status of a wrong transaction in the red part and a correct transaction in the green part. This is the possibility that the ATR indicator has put in front of us so that we can be more careful in our buying and trading.